What's up, traders, and welcome back to another fundamental video. In this video, we're going to be mainly talking about the upcoming CPI report, which is tomorrow, Wednesday the 11th at around 8:30 in the morning, and that is Eastern hours. So 8:30 a.m. Eastern, we do have CPI that is being released. And so we're going to mainly talk about gold. We're going to talk about the technicals that we have here and some potential scenarios that could play out with the actual data itself. But to have an idea of how to even approach this specific report, let's take a look at a previous report of CPI so that way we can understand what types of moves you can get during these days. Let's go back in time here. We have this CPI report this was I believe on July 11th, and then let's take a look at how the report actually came out at, right? So just like some of you have heard me talk about before, you're either going to see higher inflation, you're either going to see lower inflation, or you could get a mixed report. The best case scenario is always going to be when you actually have one-sided information, right? So in this example that you have here in front of you, we did have more one-sided data coming out. And so I'm going to show you guys the market reaction that we had here. So for example, you see here, CPI was one-sided, and it came out lower than the markets were expecting. So if you take a look at the numbers that came out here, which was these numbers right here, 0.1%, that's below 0.2. So that's showing a bigger decrease than the market participants were expecting, right? 3.3%, that's also below that 3.4%. So you see multiple reports. Look at this one, negative 0.1%, coming out below the 0.1% that the economists were expecting. And then same as you can see here, 3%, you actually saw a surprise number. Why is it a surprise? Because it's actually coming out below that 3.1%. So it came out at 3%, as you can see here. So again, all of that information on this specific day, it was one-sided, and look at the reaction that was brought onto the technicals, right? When we take a look at gold, this is that exact moment that data report actually came out at. So we actually, we broke it down here. We did this live, and we can see here that price on the lower time frames just had some massive amounts of volume coming in. We had some quick breakouts that were, for example, this one around 60 pips. Price ended up doing some short-lived breakouts later on that session. These are quick scalps that you can take advantage of, right? All just kind of putting out example for different styles of trading. Price ended up doing just a pullback, as you can see here, overall respecting that technical bullish structure that it was starting to create after that one-sided report came out. And then you can see again that price basically just did the exact same move and just continued towards the upside there, right? So now when we see this information and we understand this information, we can say now, looking at gold for tomorrow, if we have the same scenario, basically, let's say for example tomorrow we see all of these inflation reports, like the core inflation and basically every single report that you can see here, these four main reports, if they also come out, let's say at 0.1%, let's say it comes out at 3% or 3.1%, again beating these numbers over here, it's surprising the markets because it's coming out below what it's actually expected. Let's say this one comes out at 0.1% or 0%, right? Showing that it's declining. Inflation, let's say it comes out at 2.5% because it's beating the 2.6 and the 2.7. So again, with that exact scenario that we have here, that would be considered one-sided information. If we see that inflation is coming down much lower than what the markets are actually expecting, then again, that's going to push that narrative of us seeing a potential more dovish Fed. So again, a more dovish Fed, what would that mean for dollar? For dollar, that would mean that price is most likely going to turn more bearish, right? Because if we ask ourselves why dollar, let's take a look at the 4-hour really quick. If we ask ourselves why dollar has been more of on this downside trend, is because of the fact that inflation has been coming down, the Fed has been more dovish, and their message has been to the market that they are most likely going to be doing rate cuts. Now, instead of us knowing that they're going to do rate cuts, that's no longer the question. The question is how many rate cuts are they going to do and how big are those rate cuts going to be, right? So that's, again, most likely going to be all dependent on that specific economic data. So I stick to that scenario of most likely, if we, again, going back to that same piece of information that I was talking about with us seeing inflation coming out lower, That's going to most likely bring more bearish price action onto dollar. And then on gold, that could give gold a technical reason to continue pushing into these all-time highs and possibly even higher at that moment. But again, we would have to see dollar correlating with that, with just continued downside moves here. So most likely would be wanting to trade back below 101.500. And then on gold overall, I believe that if it could stay above the 2500s, let's say tomorrow, with that one-sided information, then we could overall just kind of continue pushing towards the upside. I don't really want to speculate too much on where gold is going to be tomorrow, but again, we can stick to that simple scenario of one-sided information. If it comes out lower than the markets are expecting, we'll be looking at dollar to see it turning more bearish. If it does that, then we'll also be looking at gold to look for continued buys. And then of course, guys, it would be just vice versa. If we see that inflation report actually coming out much higher than the markets are expecting, so let's go back to that report really fast. So again, if we were to see, for example, 0.4% above the forecast, let's say we see 3.3 or 3.4% or 0.3%, right? Again, higher than these numbers, then that's going to push away that narrative that we're talking about. And then we're just going to be looking at vice versa scenario, right? We would see dollar most likely turning more bullish, because again, that's taking away beliefs that they are going to do like very aggressive rate cuts or very large rate cuts. They'll be most likely be saying like, look, inflation isn't coming down as fast as the Fed actually wants, so they're most likely not going to push the pace on doing those rate cuts. So that could give reasoning for dollar to start to turn a little bit more bullish, maybe enter a new market structure phase now that it's bouncing kind of at these lows over here, these strong areas of support. Yeah, if we do see those inflation reports coming out higher than expected, I would expect dollar to turn a bit more bullish. And then taking a look at gold here, if that was the case, the same type of scenario, let's say that inflation is coming out higher, pushing back those bets that the Fed is going to be more very aggressively dovish or very aggressively doing rate cuts, then gold could, I would say, have a reasoning from close to these all-time highs to start entering some more pullbacks. And most likely we would just get a repetition of these moves of just most likely getting rejections at these highs and then continuing to do some deeper pullbacks. All right, guys, so that was the main explanation, the main things that we really wanted to cover. I believe with that information, if you use that tomorrow during the CPI report that is going to be released, you'll most likely be able to see in the price action. Again, let's take a look at how price action reacts sometimes, just to give you guys a quick reminder that you don't need to be upping on your lot sizes, right? You actually want to be careful with the amount of volume and volatility that comes into the markets. And so although the best case scenario always is to get that one-sided information, it's always best, of course, to just be patient and then wait for the market to give you those strong signs that is going to continue in that direction that you believe it's going to continue. And then you can make your decisions based off of that. But other than that, I will see you all in the next video, and take care.